Good afternoon. Good afternoon. It's Monday, the 30th of September. Welcome to another edition of Monday Market Picks. My name is Thilan Wickramasinghe. I'm the head of research for Maybank Securities here in Singapore. Thank you so much for joining us. What a remarkable week last week was with China, with a remarkable turnaround, with the rally now the biggest last week since 2008, when the government had stimulus after the global financial crisis. The CSI 300 is now in technical bull market territory. Is this the real deal, or is there something we need to be worried about? We have Erica Tay, China economist, online, and she's going to help us understand what's going on in China. And then Singapore is one of the better performing markets in Southeast Asia. I've just upgraded Singapore's STI target for the end of the year and also the next 12 months. So find out why. And there's also a lot of buzz around data centers. Hussaini is joining us to discuss why all this buzz is there and whether there are key opportunities for us to be plugged in right now. Plus, we've got Amirul, our new chart guy, on the line as well, and he's got two technical buys up his sleeve. So do stay till the end. Now, let's start the show with Erica. Erica, welcome to the show. And
Hi,
Erica, great to see you. Now, China's doing really great today as well. How substantial and big are the PBOC stimulus measures announced early last week? Is this really the game changer?
So Thilan, the PBOC last Tuesday held a press conference, and that gave everyone a taste of the volley of measures to come. In essence, they cut interest rates and also reduce the reserve requirements that banks have to hold. And more importantly, they cut the minimum down payment that second home buyers need to pay from 25% of the purchase price to just 15%. So that makes it easier for home buyers to get home loans. And also, what made people sit up was the PBOC said that it was looking to inject 800 billion in liquidity into the stock market through various measures. And they even said that they might be considering a stock market stabilization fund. So I think that helped to cheer investors a lot. But at that point, last Tuesday, we felt that, what China needs is not so much monetary easing because investors and consumers are just not willing to borrow and spend. So we think that fiscal measures are what the China economy really needs, Dylan.
Right. So that's exactly the point. I mean, I think China's tried a lot of monetary policy before as well. So will it be followed by a major fiscal package? And remind us what your GDP growth and policy rate forecasts are for this year as well as next year, Erica.
Yes, Dylan. So I think the signals that came out from the Politburo on Thursday gave a very strong sign that more fiscal stimulus is on the way, which means possibly government tax cuts or increase government spending. So far, since China's economy reopened post-COVID, I think the government has been more prudent with fiscal spending because they felt that, you need to probably save up for a rainy day. But I think the leadership on Thursday has come to the realization that, hey, this is the rainy day. So I think they have promised strong ramp up in counter-cyclical fiscal stimulus. So I think that cheered the market a lot. In addition, another major U-turn that was made known on Thursday was that, the government pledged to put a stop to the decline in the property market. So those are very strong words and a huge shift from its stance over the last few years of just letting the property bubble deflate by itself. So I think, that gave people confidence that more property measures are on the way. And indeed, on a Sunday night, late last night, the provinces in Guangzhou, Shenzhen, and Shanghai actually announced liberalization of housing purchase curbs. So those are very good news, Dylan.
Right. So, Eric, I've got to ask you this. I mean, you've been looking at this market for a very, very long time. So, are you seeing something, or are you feeling that there's something different this time around with these policy measures, given the fact that we've had quite a few false starts over the last 3-4 years?
To be very honest, Dylan, no fiscal details have been announced. So I think, markets might have run up in expectation of a big bazooka. We actually don't know any specifics about the amount, the form, and the timing of the fiscal stimulus. So I think, it could be big or small, and it could be implemented immediately or not. And, there could be obstacles. So I think, we need to wait and see before actually making a judgment on, how good it is for the economy. I think right now, we think that probably fiscal stimulus of 10 trillion RMB is needed just to plug the local government funding gaps from the fall in property-related revenues. So that will amount to more than 7% of GDP. So that's a huge ramp up in fiscal deficit from the current level, which is about 4.8% of GDP. So, anything that is beyond that amount, I think is something worth cheering, Dylan.
Right. So just keep an eye out, exercise some caution as we look into to benefit from this rally. Thanks, Erica, so much for joining us. Now let's turn to Singapore. This is a market that has actually been doing pretty well this year, and I think a lot of the positive, global sentiment is going to have a positive impact to Singapore as well. We've got the US kind of going into a smooth landing. We've got all this pump priming in China, and we've got quite a bit of activity in most of the other Southeast Asian markets as well. So post second quarter results and post the Fed cut last week, the week before, we revisit our outlook for the Singapore market. The STI is up about 10% so far this year, beating most of the ASEAN markets, with Malaysia being the big exception. We think this momentum can continue given by the rotations into more yield-centric sectors by investors. Now, stepping back first and looking at the second quarter results season, we see earnings momentum remaining quite solid and positive for 2 quarters in a row, which was led by industrials, by the transport sector, consumer, as well as the financials. Now, there were some larger cuts to earnings per share in the first versus the first quarter, 25% in the second quarter versus 17% in the first quarter in terms of our total coverage universe. But this was mostly concentrated on the REITs as well as tech manufacturing. These are very sector specific, and everyone's been very aware of what has been happening in these sectors. And going forward, we think that the downgrades have bottomed out, especially in the backdrop of falling interest rates. This, we think, will be the next leg to upgrade these stocks. Further and deeper cuts should actually widen the dividend yield spread and also catalyze capital recycling as well. Now, at the same time, sectors like industrials and tech manufacturing should also see their margins improving because their borrowing costs are falling, and then with that, volumes should also be coming back. We also think that the telcos will benefit from the attractive dividend yields as well, and also from rising data center demand, and we'll address that in a short while. The small and mid caps are also very well positioned, especially those linked to the offshore and marine theme, as well as electrification and the data center theme as well. Now, the banks are in somewhere in the middle. They're going to see their margins come off, but the pace of that margins coming off will be quite slow, given the fact that there has been quite a bit of hedging in terms of their margins. And in terms of their dividends, they're still offering pretty attractive yields. So as interest rates fall, those dividend spreads will also increase as well. So we think Singapore's yields are very yield-friendly market, gearing to themes like offshore and marine, data centers, AI, sustainability, plus the MAS continuing to support the Sing dollar should raise the market appeal to a lot of investors rotating money into this region. We also think that the announcement of the Johor Singapore Special Economic Zone will be a very positive catalyst as well, particularly with gearing from Singapore's financial center and the lower costs in Johor. Plus, I think the themes like AI will start to really play out next year in terms of bringing down costs for quite a lot of companies and also increasing revenues as well. So we've actually raised our STI target to 3890, which is about 9% higher than what it is currently. And our top 10 picks are mostly driven by yield rotation, as well as companies that are linked to these themes that I talked about, which is offshore marine, sustainability, AI. So the top picks are CDL Hospitality Trust. You can see that on your screen. CLI, CSC, DBS, FEHT, Genting Singapore, Marco Polo Marine, Sea Limited, Singtel, as well as StarHub. Do read a very detailed note in our newsletter today. Now, with that, let's go to data centers. That's creating a lot of buzz. Last week, I was actually in Johor at the Invest Malaysia conference, and one of the main topics that everyone was talking about was data centers. Hussaini and our regional telco, property and utilities team have done a very comprehensive report and outlook on the data center segment. So Hussaini, welcome to the show.
Thanks.
Now, Hussaini, you wrote on the ASEAN data center boom last week. Why is ASEAN and Malaysia particularly becoming a hotspot for data center investments? And can this actually be sustained?
Yeah, thanks, Dylan, for having me. Yes, indeed, ASEAN and Malaysia to a large extent is becoming a hot spot for data center investments. And we think there is still a long runway for growth. We expect ASEAN data center demand to grow at 20% CAGR over the next 5 years. And 3 key points to note. First, ASEAN data center infrastructure is 50 to 70% behind the more evolved markets like US, China, Japan, and Korea. For instance, US has around 16 gigawatt of data center infrastructure for a population of around 330 million or 340 million, which comes to around 23 megawatt on a per million pop or population. Same for ASEAN is 2.5 megawatt. So ASEAN is highly underpenetrated, and that creates a long runway for growth. Second, we see ASEAN can punch above its weight and can emerge as a global data center hub. Now, key factors underlying this view is geopolitics. So we see ASEAN to benefit from US-China trade tensions and given its own positioning as a non-aligned bloc. Second, cost to build data center and to operate data center is around 10 to 30% below global average in ASEAN. So that is also a factor. And finally, there is favorable power and water supplies or infrastructure in ASEAN to facilitate data center demand growth. And finally, is AI, artificial intelligence. So AI we see, and we would put a detailed discussion in the report. AI is a generational demand driver for data centers. As AI drives the demand, data center demand, we see that it will also benefit ASEAN.
Got it. Got it. Now, there's a lot of skeptics who say, there's a lot of investments happening, and it's going to create a massive glut in data centers. Are you seeing that risk actually manifesting, or are you seeing something different?
No, we don't see that as a risk. That's the short answer. And we have done a detailed analysis on that side in the report. So, and that's a key investor concern as well, the risk of oversupply. So in ASEAN, 6 gigawatt of new capacity builds are announced, which is 4 times higher than the current capacities, which leads to the concern of oversupply or supply glut. Okay. Now, what we see is that we think the risk of oversupply is limited. It is because the big capacity announcements are more theoretical in nature, whereas on the ground deployment is relatively small. For instance, of the 6 gigawatt in new capacities being announced, under construction capacities are just 400 megawatts, which is just 5 to 7% of the announcements. Even the committed supplies are also fair bit limited. Okay, and bulk of the new capacity announcements are in the early stage, which in our view will only hit ground based on demand. Maybe if I take a bit longer, see, most of the companies announce data center depending on the plot of land they acquired. And when we go more into the emerging markets, the land is relatively cheap. So they acquire a bigger plot of land, taking into consideration future needs, and on the back of that, they announce the capacities. But essentially, the on-the-ground deployment is relatively small. See, data center is highly capex intensive, right? It also needs long-term commitments such as power, water, and auxiliary capex like grid connectivity and things like that, fiber connectivity as well. So companies, in my view, are not going to speculatively build. They are only going to build if they have a good demand visibility or have some sort of commitments in place.
Right. Yeah, that makes it a lot more clearer. Now, you can see on the screen, there's quite a lot of stocks, stock picks out there. I think I counted 17 in terms of beneficiaries. Now, if you had to pick 5 stocks out of these, Hussaini, as the big winners, which ones will they be?
Yes, you rightly pointed, Thilan, that many sectors and companies which are going to benefit from this multi-year data center wave or theme. 5 top names would be first Singtel. See, Singtel is emerging as a data center platform, ASEAN data center platform. They have a long track record of running data centers in Singapore, and Singtel is also moving into AI and GPU as a service. So Singtel is a key beneficiary. Second, Gamuda in Malaysia. They are the early stage beneficiary with demand for data center construction and related infra like renewable power. Our analysts just raised the TP for the name. Third would be YTL Power in Malaysia again. They are playing in multiple spheres of data center supply chain. They are also NVIDIA's preferred partner. Fourth would be Gulf Energy in Thailand. They have a strong renewable pipeline, which is very much in demand from data center operators and cloud companies. And finally, CAC Global in Singapore, which benefits from the global demand for data centers. We expect data center order book for CAC Global to double by 2026.
Great. Thanks, Hussaini, for that. And now let's move to Amirul, our chart guy. He's got some pretty bullish charts to show us. Amirul, first of all, welcome to Maybank, and we're looking forward to collaborating with you a lot more going forward. So, what have you got for us today, Amirul?
All right, hi Dylan, thanks for having me. So first chart that we have here is Geo Energy Resources. So if you could look at the chart price over here, the latest candle that you can see right there, the green big candle, just made a get-up move last Friday, which took out two big key moving averages, which are the 30-day SMA and also the 50-day SMA. So I believe if the price could maintain above the green line, which is the 50-day SMA, it could reach our first target price of SGD 30 cent, considering that previous move was a sideways move. So I believe this is a bullish breakout. So the next chart that we have is Genting Singapore. So if you can see here, I actually drew a line and also three circles to signify an important bullish reversal pattern, which is the inverse head and shoulder pattern. So you can see here, there are two small circles which resembles the two shoulders and one big circle at the bottom, which resembles the head pattern. So if you could see, the price just actually broke the pattern last Friday with high volume, which indicates that there's a new uptrend going on, considering the higher lows forming starting from the June low. And then if you look at the price this morning, it actually gap up. So I believe the bullish move is now further validated considering the price move this morning. And I also believe if it could maintain above this neckline pattern, if you could see the long line over there, we could actually reach our first target level of 91.5 cent. So that's it from me, Taylor.
Great, thanks, Amirul. So Genting, Singapore, and Geo Energy. Okay, so we're very short of time. So just to go into the events and corporate announcements that are coming up, we got the URA Property Price Index on the 2nd of October and the PMI numbers coming out on the 3rd of October. That's going to give us some clarity on whether the MAS will keep their policy as is or actually start easing. And also we got retail sales coming out on the 4th of October. Apart from that, we've got some very special events coming out on the 16th, we've got another investor night with Citrium. So do join us, especially given the fact that there's so much happening in the oil and gas space, as well as on the sustainability space. This is not a stock that you can afford to miss, and we've got the management there. So do join us. And with that, unfortunately, we are out of time. Thank you, as always, for joining us, and thank you so much for your support, and have a profitable trading week.